Hello everyone, welcome to Financial Engineer. Today in this video, let's learn some advanced topics in derivative share market called as futures trading. Futures trading is one of the most advanced level of trading. Today let's learn what is futures trading and how does it works, how profits and loss are done in futures trading, and what are advantages and disadvantages of futures trading. Along with this, let's also understand what is lot size, what is contract value, and what is initial margin. So, what is futures trading? Futures are a standard contract between buyers and sellers, where seller is selling a contract for a bit higher price for long-term agreement. For that, buyer needs to pay a small initial margin of 20 to 50% of that contract value. There are three fixed time periods of futures, which is current month contract, near month contract, and 4-month contract. And every futures contract expiry will be that future month's last Thursday. That means at every last Thursday, that futures month's contract will be over. For example, if we talk about Reliance futures, we can buy its three future contract. First, current month contract. Current month is September, so we call it Reliance SEP FUT, means Reliance September future. Second, near month contract, which is October, so we call it Reliance OCT FUT, means Reliance October futures. Third, 4-month contract, which is November, so we call it Reliance NOV FUT, means Reliance November futures. And another thing is, always you have to buy futures in lots. Every share lot size is different. Example, Reliance lot size is 250 and SBI Bank lot size is 1500. That means every time you buy one lot of Reliance, it will be equal to 250 shares, and every time you buy SBI one future lot, it will be equal to 1500 shares. Now, what will be the value of the contract? To calculate this, multiply lot size into futures price. Take for example, Reliance September futures price is 2377 and its lot size is 250. So multiply 2377 to 250, you will get 5,94,250 rupees. What it means is, Reliance September futures contract value is 5,94,250 rupees. Here in futures, the important thing is, futures price is not for lots, it's for one share. Means Reliance futures price is 2377, right? It's not for one lot, it's for one share. That means 1 rupee movement in futures price is equal to number of shares in lot. Example, if 1 rupee price goes up in Reliance and you have bought one future lot which is 250 quantities, for 1 rupee movement in price gives you 250 rupees. For 2 rupee movement you get 500 rupees. Let's talk about the meaning of future contract. Let's take Reliance September future, which is current month's contract. Its price is 2377, and Reliance October future, which is near month contract, its price is 2385, and Reliance November future, which is 4-month contract, its price is 2396. Now, if we see the spot price of Reliance, it is 2378. According to people, on Reliance September future expiry, the price of future contract will be less than the spot price. On a simple note, it's just a guess of the people that price will drop down by the expiry. And in every second, change on spot price will also change in futures contract price. Now let's learn the meaning of buying and shorting futures. For buying, take Reliance September futures is 2377, and if you buy one lot at 2377, this means at the end of September expiry, if the price of that contract is more than 2377, we are in profit, and if the price is same at 2377, we are at no profit no loss, and if the price closes below 2377, we are in loss. Let's calculate loss and profit. At expiry, imagine the price of that contract goes up to 2470 rupees. We have made a profit of 2470 minus 2377, which is 93 rupees. As we know, one lot is equal to 250 shares, right? So 93 into 250 rupees is equal to 23,250 rupees profit with one lot. Now multiply how many lots as you want. In the same way, if the price drops down to 2284, we have made a loss of 93 rupees, which is 93 into 250 is equal to 23,250 rupees loss. And it is not compulsory to hold that contract till the expiry of that month. We can buy and sell that contract for 1 week, for 1 day, for 1 hour, or even 1 minute also. For shorting futures, If you have some bad news or some technical setup telling you that Reliance share will drop down, you can sell Reliance September futures at 2377 rupees, and as per your prediction by expiry, if the share price falls down, let's say till 2284 rupees, then you can buy it back at 2284 rupees and make a profit of 93 rupees, which for one lot is equal to 23,250 rupees profit. If your analysis is wrong and if the price didn't drop down, instead it went up, then you have to buy it back at higher price, right? Let's say 2470 rupees. You have made a loss of 93 rupees, which for one lot is equal to 23,250 rupees loss. Like this, futures trading can be very risky and very profitable also. By now, you'd have got some doubt. For buying futures, we get profit and loss just like shares. So why should we buy futures for fixed time? Rather, we can buy shares and keep for rest of the life, right? Let's talk advantages and disadvantages of futures trading. Futures trading best advantage is leverage. As I said earlier, Reliance contract value for 2377 rupees is 5,94,250 rupees, right? We don't need to pay full 5,94,250 rupees to buy a contract. Instead, we can pay only little margin of it, like 20 to 40%. It depends on broker. It may change daily. Now currently, today to buy a futures contract of Reliance, we just need to pay 1,10,000 rupees, which is only 20% of 5,94,050 rupees. This is the main reason and benefit of buying futures. The second advantage is we can short a share for long time till expiry, where in cash market you can short a share only for intraday, right? And another advantage is less brokerage charges and taxes. In cash market, we have to pay charges for every share, but in futures we just have to pay for lots. Now, disadvantages are it is more riskier than cash market because in futures we pay less money than actual required money. Example, for Reliance one lot, which is 250 shares, we just need to pay 1,10,000 rupees, where in cash market you need to pay full 5,93,250 rupees. If you buy shares in cash market for 1,10,000 rupees, you can buy only 50 shares. But for futures in 1,10,000 rupees, you can buy 250 shares. If the price goes against you, let's say even for 5% also, you lose 118 rupees, which in cash market you lose only 5,900 rupees, but in futures you lose 29,500 rupees. In profits also same, you get high return, but you should have high technical skills for that. Let's learn about technical analysis in further videos. I hope you understood all about futures trading today. Thank you. Have a nice day.